Welcome to Beyond Just Money. My name is Samta, and today with us we have the head of content for 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Limited, Miss Nidhi Sinha, as our guest speaker. So Nidhi, welcome to Beyond Just Money, and like we have seen that the hectic world of cryptocurrency never stops twisting and turning. So when cryptocurrencies were first introduced, governments did not pay attention to the revolutionized assets, but now they certainly are, it seems. So according to you, Nidhi, how is cryptocurrency taxed in the UK, and what are the important things that one should keep in mind before investing in crypto?
Thanks, Samta. It is always a pleasure to be here. Today's topic is very interesting on how cryptos are taxed, and that is something that we don't often think about when we are investing, but nevertheless it's very important. Cryptocurrencies, primarily Bitcoin, have really evolved since they appeared for the first time almost over a decade ago. With significant tech developments and younger generations being highly interested in the digital storage of money, cryptocurrency tokens are worth thousands of dollars each because of high interest. As you rightly said, Samta, when cryptocurrencies were first introduced, governments did not pay much attention. However, in the last few years, since 2017 in fact, when Bitcoin experienced its first peak, authorities have come together to figure out a way to get some advantage from the situation, and that they have done by introducing cryptocurrency tax regulations. Some countries in fact have still not considered cryptocurrencies as a personal gain under taxation laws. However, those that did have controlled it differently. Before delving into each state's system, let us recall the basics of cryptocurrency and related terminology so that we can understand the taxation laws better. Cryptocurrency, which is sometimes also referred to as a digital asset, is a relatively novel online currency that is operated on blockchain technology. Investors saw the potential that cryptos bring as blockchain offers almost complete anonymity due to its military-grade security. As most people already know, no cryptocurrency exists in physical form at all. They are usually stored in digital wallets as coins. However, some investors may prefer paying for an online broker to keep and store cryptos on their behalf. These digital assets can then be traded on specialized trading markets. The most popular cryptocurrency exchange currently is Coinbase, which is based in the US, followed by Kraken, Binance, and Jaxx. Talking about the US, the Internal Revenue Service there handles all cryptocurrency regulations. Then Australia is one of the first countries to have come up with clear regulations for cryptocurrencies. The government there has imposed a capital gains tax on cryptocurrencies if investors sell their assets. Now, when it comes to the UK, the HMRC or Her Majesty's Revenue and Customs Department has set clear guidelines as to how individuals owning crypto assets are taxed.
Right, Nidhi, as you mentioned above, so what are these guidelines, and do all cryptocurrencies come under these regulations in UK?
Samta, the HMRC does not consider crypto as currency or money, so to say. Rather, it considers it as an asset. It has, in fact, it has identified three types of crypto assets. One is exchange tokens, which is usually currency coins like Bitcoin. Then there are something called utility tokens. These are used by businesses for utilities. Then comes security tokens, which are a representation or a form of equity in a business. So the tax treatment of all these depends on the use of the token and not the definition exactly. How the token is used will decide the taxability. Now, in most cases, individuals hold crypto assets for personal investment, usually for capital appreciation, wealth creation, or to make some purchases at a later date. Such individuals, however, will be liable to pay capital gains tax when they sell their holdings in the crypto assets. The HMRC considers disposal as selling crypto, using crypto to pay for goods and services, gifting crypto to another person, and exchanging one crypto for another. All this is considered selling and will attract a capital gains tax. The allowable cost must be deducted while calculating a gain or loss. So when calculating capital gains, the allowable cost must be deducted. This allowable cost includes heads like the original purchase cost, transaction fees, professional costs related to buying or selling of the crypto. The actual taxability will depend on different tax brackets in which you fall, and that is basically based on the income level and the individual's gain. Moreover, capital loss from crypto transactions can be considered for tax liability. They can offset the gains if reported within 4 years of the loss. So you gain in some way. Individuals will be liable to pay income tax and national insurance contributions if they receive crypto assets from the employer or by mining or by any other confirmed transaction in crypto assets, so to say. In unusual cases, sometimes, where an individual is running businesses that carry financial trade in crypto assets, there will be taxable trading profits. If the crypto profit exceeds the capital gain tax allowance of £12,300, one needs to pay tax on the profits over and above this amount. So suppose you have made a profit of £18,000 by selling cryptocurrency, of course, then only 5,700 is taxable at applicable tax rates. So I came to this amount, Samta, by deducting 12,300 from my profit of 18,000. So that is the explanation.
Oh, okay. So Nidhi, like you mentioned above, and now it is clear that HMRC taxes crypto assets based on what the individual do with their crypto. So are these tax laws applicable on all UK residents? And what really happens when a UK resident makes the trade somewhere else?
So Samta, what the HMRC does it considers that throughout the time an individual is a UK resident for tax purposes. So the exchange tokens they hold as a beneficial owner will be located in the UK. This means that a person who holds exchange tokens is liable to pay UK tax if they are a UK resident and carry out a transaction with the tokens, which is again subject to UK tax. So that's how it works, Samta.
Oh, well, thank you so much, Nidhi. That was an interesting topic, and I'm sure a lot of our listeners who had this ambiguity related to crypto tax in UK, their doubts are cleared. And in case you still feel that you have missed out on something, don't worry. You can revisit our podcast again and listen to our podcast again. And for that, you can log on to our website, which is calkinemedia.com, or you can also go on our YouTube channel. And until then, we will see you next week again with yet another insightful episode of Beyond Just Money, and we will discuss yet another interesting topic with our guest speaker. Until then, as we always say, stay apprised and invest wise with 𝐾𝐤𝐴𝐚, your best guide.